Welcome to the deep dive. Today we're plunging into, well, the very dynamic world of cryptocurrency.
hmm
Specifically, we're looking at Bitcoin's price movements and some pretty bold predictions floating around.
Yeah, there's certainly a lot of talk.
We've got a fascinating source to unpack. It's a recent YouTube video called Bitcoin, Massive Pump Incoming, very soon, BTC price prediction today. It's from the Bitcoin Hyper channel.
That's right. And, this deep dive should really illuminate the technical analysis they're using, the specific indicators that lead them to predict quite a significant upward move for Bitcoin.
Okay.
Our mission here is really to break down their reasoning, look at the chart patterns they see, and importantly, even their backup plans, their contingency plans, gives you a pretty full picture of their bullish outlook.
Right.
What's interesting, I think, is how they mix these really confident predictions with very clear risk management.
Okay, so let's jump right in then. The main takeaway, as the title shouts, is this strong bullish feeling for Bitcoin, this massive pump incoming. What did the speaker actually point to in Bitcoin's recent movements that sort of backs this up?
Well, they highlighted something that happened just hours before their video. Bitcoin got rejected from what they termed a major liquidity level.
Okay, a liquidity level.
Like a price magnet?
Sort of, yeah. Or a wall. It's where lots of orders cluster. And this particular level, it also lined up with the value area high. That's the top end of where most trading happened, and a volume cluster. So a really strong resistance area.
Got it.
And they explained, these levels often get respected because people put short positions there, right, with stop losses just above the recent highs. The charts, the little wicks on the candles, showed those stops apparently got triggered, which then led to a quick rotation back down.
So a little dip, but one that fits their narrative. And didn't they also mention a prediction from the day before kind of played out?
Exactly, yeah.
Yeah.
They noted that Bitcoin had hit a major daily high time frame area of support. So a strong floor on the daily chart about 14 hours before the video.
And this support level also lined up with something called an anchor VWAP.
Volume weighted average price, anchored.
Correct. Anchored to a specific point. It helps spot key levels based on trading activity since that point. They were looking for a bounce there.
And they got it.
And they got the bounce, yeah. Which actually led them to add to their long Bitcoin position. They mentioned an average entry around $116.06 roughly.
Wow, okay.
And they also said they were holding longs in various altcoins too, so it wasn't just Bitcoin they were bullish on.
All right, and this is where it gets really interesting, I think, the actual predictions for this massive pump. They use some pretty advanced technical tools, right? Elliott waves and Fibonacci. Can you walk us through that?
Sure. So they outlined a bullish Elliott wave count. Now, Elliott wave theory, it suggests market psychology moves in these predictable wave patterns.
Right, the 5 waves up, 3 waves down idea, basically.
Kind of, yeah. They identified the whole previous move up as the first impulse wave. Their view now is that Bitcoin has potentially just finished the second Elliott wave. That's the corrective dip.
Okay.
And now they believe it's working on the third most impulsive push towards the upside. This is usually the longest and strongest wave, and they expect it to really take shape in the next couple of days.
So very soon. And how did Fibonacci come into play for the specific price targets? That $125 6K number is very precise.
Yeah, it is. They used a Fibonacci extension tool. They measured from a swing low up to a swing high, and then back down to the next swing low, the end of that presumed second wave.
Okay.
Their specific target for this big third wave is the 1.618 Fibonacci extension level. And doing that calculation gave them that approximate $125 in 6K US area.
That 1.618 level is a key one in Fibonacci, isn't it?
It's a very common target, yeah, especially for third waves. But they didn't stop there. They anticipate after that some kind of another correction that would be the fourth wave, followed by another push toward the upside, the fifth and final impulse wave, aiming for a bigger 1.1 Fibonacci extension at $126 and a 4K.
Okay, so another target slightly higher.
Exactly. And after that whole 5-wave sequence finishes, they suggested, the whole structure could end, potentially leading into a larger correction.
That's quite a detailed roadmap.
Yeah.
So beyond Elliott wave and Fibonacci, what other indicators did they use to sort of bolster this bullish case? You mentioned order flow and divergences.
Yes, they looked closely at the CVD indicator cumulative volume delta.
Right. You mentioned that earlier. It tracks buying versus selling pressure.
Exactly. real-time aggressive market orders. What they saw was a significant push towards downside on the CVD indicator, so more selling pressure, more aggressive selling hitting the market.
Okay, which sounds bearish initially.
You'd think so, but here's the key. Bitcoin's price was not making a lower low while this was happening. It was actually forming a higher low.
Ah, okay, so the indicator's going down, but the price is holding up better.
Precisely. And that creates what's called a bullish divergence. You've got a lower low on the CVD, but a higher low on the actual Bitcoin price.
And the interpretation of that is?
To the speaker, this strongly suggests that bigger players are absorbing the selling pressure. Like, despite this selling hitting the market, someone with deep pockets is buying it up, preventing the price from dropping further. It's a classic sign of accumulation, potentially.
That makes sense. A hidden strength. They also mentioned open interest, which often confuses people. How did that fit in?
Yeah, open interest can be tricky. They noted that open interest was increasing for the past couple of hours, while Bitcoin's price was actually pushing down slightly.
Okay, so more contracts being opened as the price dips.
Right. Open interest is the total number of outstanding futures or options contracts. So if it's rising while price is falling, it typically means new short positions are being opened. People are betting on further downside.
Again, sounds bearish.
On the surface, maybe? But the speaker interpreted this differently. They saw it as more evidence of bullish absorption. The shorts were piling in, but someone was taking the other side, absorbing that selling pressure.
So the shorts might be providing fuel for a squeeze later.
Potentially, yeah. It reinforced their bullish view. They basically said, if you're trading based on probabilities, this setup makes you look for higher targets, maybe even pushing towards another all-time high.
This all sounds very confident, but as we know, trading predictions aren't guarantees. How did the speaker handle the risk side? What's the plan if this doesn't play out?
And that's crucial. They really hammered this point home. You absolutely need a proper invalidation level because, like they said, nothing in the market is 100% probable.
Sensible. So what was their level?
For this new long position they took, their stop loss, the point where they automatically exit to cut losses, is set around $114.07K US. If Bitcoin breaks below that specific price, their whole bullish Elliott wave count is immediately invalidated in their eyes, and the plan is to get out of the trade as quickly as possible.
So a clear line in the sand.
Very clear. They explicitly acknowledge that losses are also part of trading and really stressed how vital risk management is and, managing how much capital you actually risk on any single trade. It seemed like a very disciplined approach.
It's definitely good to hear that balance, especially with such a strong bullish call.
Yeah.
Did they mention any signals that might point the other way? Any potentially bearish indicators, and how do they square those?
They did, actually. They pointed out two things that often look bearish, but which they decided not to bet on this time.
Okay.
First, on the 1-hour chart, the Athler stochastic CG oscillator, it's a type of momentum indicator, was forming something like a double top pattern. Usually that's seen as a bearish sign for Bitcoin.
Right, suggests momentum might be failing.
Exactly. And second, the MACD indicator, another popular momentum tool, also on the 1-hour chart, showed higher highs on the MACD itself, but lower highs on Bitcoin's price.
Ah, a hidden bearish divergence this time.
Correct, a hidden bearish divergence. It often suggests a trend might continue downwards after a pullback. So, two potentially bearish signals right there.
But they dismiss them. Why?
They basically decided not to weight them heavily in this context. They acknowledged the push upside might not happen immediately, but suggested if Bitcoin did push down from here, they'd view it as just an ABC correction.
Which is part of the Elliott wave theory again, right?
Right.
A corrective pattern within a larger uptrend.
Exactly. A standard three-wave correction, down, up, down, before the main trend resumes.
So if that ABC correction does happen, what's the plan then? Just sit tight?
No, quite the opposite. They saw that potential dip as an opportunity. They said they would look to add even more to our long positions if Bitcoin reached major support areas lower down.
Ah, buying the dip, essentially. Any specific levels?
Yes, they highlighted a weekly high time frame area of support way down at $107 3Ks. They noted it lines up really nicely with the value area low, the bottom of that high volume price zone, and another volume support level.
Okay, so multiple factors converging there.
Right. And their reasoning was, because they believe Bitcoin is fundamentally in an uptrend, these strong high time frame support levels have a higher probability of holding. If price gets there and bounces, it could allow Bitcoin to continue its way literally straight towards another all-time high.
So even the bearish scenario ultimately feeds back into the bullish thesis for them.
Really?
What about trend lines or channels? Did they mention anything like that?
They did. On the 1-hour chart, they pointed out an ascending channel, basically two parallel lines connecting the higher lows and higher highs. The top of that channel was projected around 121K, which also lined